seen a definitive break to the downside, nor have we seen any break whatsoever to the upside. It does look as though during today's session worth of trade that we have simply closed the gap, between that of Friday and Monday's candlestick. You can see here on the Dow Jones Industrial Average, put out a warning over the weekend to do with this shooting star candlestick, which was also showing up in relation to potentially that of a short-term or at least an intermediate sort of exhaustion gap to the upside. We saw originally on Monday the gap to the downside, a little bit of a hangman spinning top, so to speak, at resistance. And today with this upper wick that we have printed on the Dow Jones Industrial Average, what we've done is we've simply closed this open window. This is also looking like some form of an evening star 3-day reversal pattern. The problem is, however, we don't have any confirmation yet the market is pulling back. So really what you can do if you wanted to be aggressive in the trade setup, you could simply put in a contingency order between or at least below all of these lower wicks on these candlesticks. Otherwise, again, you can more or less sit on the sidelines and follow along with these markets and just be prepared and really patient to jump into the market at a later date. There's no point rushing trades or forcing trades. But again, these are all warning signals. And essentially what we've done today, although we are seeing that of a positive print towards the back end of today's session as at Tuesday, it does look as though we've closed the window and it is setting up for a little bit of volatility potentially come sort of the back end of this current week. If I switch to the S&P 500, we haven't actually closed this gap. We don't necessarily have to. I mean, ultimately this gap will be closed even if we do come down first of all, but then ultimately rally. But you can see this sort of dark candlestick. We still have approximately 20 minutes left in today's session. But even after and considering that of Monday's candlestick showing up really to be that of a Dragonfly Doji, again, it is blending to the larger sort of story of a sort of an intermediate or at least a minor level reversal to take us on back down, potentially to test, who knows, 2,500. On the S&P 500, again, you have a collection of wicks, and it is setting the stage for ultimately when we do break these wicks, all right, on a short-term sort of minor level of the trend, it will add to, of course, selling pressure, which will push these markets temporarily lower. Now, if I switch to the NASDAQ, again, we still have this open window. We haven't closed it. So the only market of our closely followed three is being the Dow Jones that has closed this window. But this is, at the current juncture anyway, the current snapshot, that of an engulfing candlestick. And again, you've got this long lower wick over here, which takes us back to Wednesday last week. That was January 23rd. That will be the line in the sand. If we start crossing that, you'll start to see, again, a little bit more supply enter into the market. Now, recently, or at least yesterday, Caterpillar reported their earnings. Let me just delete this vertical line here. We do have that of a bearish gap to the downside. And in fact, this is just taking us back down to where we have been largely since really the sort of the late period of October, all throughout that of November, and also continuing into the month of December. We did see a little bit of a pop moving into earnings, and again, we did have a trade here at 129.25 moving into earnings, but we did have to liquidate that. But you can see we have, of course, just printed another window to the downside. So if we see these markets pull on back down and you see Caterpillar continue to sell off, pay attention to about the 120-118 handle. If we get back down into this area, and again, we continue to see positive divergence continue to shape up, we see these oscillators move into short-term oversold territory, but we don't break below this low over here in October and also the low in December, if not print a similar low in the month of most likely February. Well, then it sets the stage again for a continuation, not only to break firstly above this high, and this high, but to take us up to potentially 155. But we will have some good trades, so to speak, from 120 to actually close the gap to begin with at about 135 or 134 as well on Caterpillar. I wouldn't be looking to actually short this from about 122 down to 118. There's not really a nice risk and reward ratio. In fact, I'd rather be focusing on the markets, okay, the market indices, and waiting for the opportunity to take that type of trade just here, okay? So on that note, I'm going to say farewell to you as at this Tuesday afternoon. If you have any questions, email me, success@pivotpoint-trading.com. Otherwise, I'll see you later in the week for another market update. All the best. Farewell.